great future. We're talking real money.
The market average that will remain unnamed here on the program set a record closing above 50,000, a new all-time high for a little tiny sliver of the stock market, which is it a big deal or is it not a big deal that thing? Don't say it.
Oh, sorry.
You know, I thought we were training the media to stop saying it because, you know, you haven't heard
We've done
it
better. You don't hear it a lot. No, you don't hear it a lot. So
until this week when it hit 50,000. But
it's
just
the
30
big
stocks.
Print on the Wall Street Journal today.
I know, but here's the thing.
Time.
While that little group of stocks is setting records, other stocks are not. They're scaring people. I mean, some of the hot stocks out there, like Robinhood, which was up massively last year, is...
Oh, you think 204% in 1 year is massively?
Pretty good.
Good
But
return,
down 36% in like 2 months is pretty terrible.
Well, about 1 month and 1 week, but okay.
Oh, yeah, you're right. It's not
Annualize
not
that,
even 2 months.
Sure. Yeah.
You know, and Palantir, that was the
ultimate meme stock. Yeah.
It's down 27. So you've got all these really high-flying stocks that are down, which are scaring some of the traders. And Jason Zweig wrote a piece about this saying, well, maybe we need to rethink how we invest.
Yeah. Excuse me? Then he goes
exactly.
into,
that was kind of like, what?
He goes into using a thing called low-volatility exchange-traded funds and mutual funds, which we use in our portfolios, by the way. That is a factor, if you will. Buying stocks that don't move up and down as much as others. Well, you're always hoping they move up, but you're down. And then he launches into kind of the explanation of how, but those type of securities have made less, but they don't go down as much as the index when the index gets creamed. And by the way, we should just again answer this. The Dow Jones Industrial Average is 30 stocks, of which the index is the most poorly put together index in history. It's the prices of the stocks. Are
you talking about the S&P 500 as an index?
No,
or the Dow?
Dow Jones.
Well, the Dow
Jones
isn't an index. It's
pardon me,
average.
whatever you want to call it.
It's
Yeah,
an
the
average of the price of 30 relatively random stocks.
There's absolutely 100% no reason to pay attention to it, period. No. Not just because it's limited, but because the way it's designed. It's stupid. Anyway.
It's 1890s math.
Yeah.
Before
but the
computers
question is,
or even calculators.
Should you make a swap now to stocks that feel less risky? And so, I mean, do something to your portfolio. By the way, I took the liberty of looking up. If you're just in a diversified portfolio year to date, 100% equity, U.S., international, big, small value growth, all those things.
26. Talking about this year. Yeah.
2026, that would be year to date in 6 weeks.
Yeah.
You're up almost 6% year to date. So while it's felt rough because part of it has been blah, 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 it hasn't been. The S&P, by the way, is only up 1.6. Another reason to diversify is if the U.S. small cap value stocks, guess what? They're up 13%. We're not going to say we told you so, but we've owned them for a long time.
We told you so. And this is
own them.
We could make ourselves sound brilliant if we were that kind of person, which most people in the financial media and from Wall Street are. They want you to think they're brilliant and they knew things in advance. Well, we could say that. We were telling you to get into small cap and international, and whoa,
that's pretty bright. Yeah,
we look so smart. Except that's not what we said. What we said is the whole darn time, you need to be in a little bit of everything. And if you want to make it a little bit better, then you tilt to small cap and value stocks. That's it.
You got the whole world in your hands. Isn't that what they sing at that particular ride or something at Disney?
No, it's a small world after all.
I'm close.
They don't have it.
You got the small world in your hands. That's
the church. That we used to have a church-themed Holy Land experience. Now it's a hospital.
That says it all right there. So, so part one. We never, and this came up in a conversation last week where somebody said, with the market going down, first of all, the market's only gone. That's one. Number two, we don't know what after that moment, after Friday, whatever, where it's going to go next. So your portfolio is already built. That's one. Number two, it's properly diversified. Number three, it's built for you. You're the one that's deciding how much risk you want to take, how much volatility you're willing to accept. That's it. It has nothing to do with the day-to-day machinations of the market, which are going to maybe a completely different trade on Monday. Who knows what's going to happen?
Yeah, and Zweig in his article says something that he says a few things that when we generally really like Jason Zweig's pieces.
Oh, hugely.
Sure. I don't like this one because
nope, I don't either.
One of his paragraphs says, quote, "If you hold a low volatility fund, you're likely to outperform the S&P 500 in the short run whenever the market stumbles."
Right.
What that is saying is that he is implying that you should do this when the market stumbles. The problem with that is you don't know the market has stumbled until the market's already stumbled. So do you do it after it stumbled? If you can't do it before it stumbled? And what if it's done stumbling when you go into these low volatility stocks?
Yeah. No, I would not make a move today. I wouldn't make a move any day unless it was to diversify my portfolio to include these types of stocks, which you should already have in there.
In other words, there's no trick. 855-935-TALK is our phone number. 855-935-8255. We'd love to talk to you.
Tom and Don are talking real money. Your guides to a really great financial future. Tom and Don are talking real money.
Do you have questions about money? Well, here's the way to get them answered, or at least attempt to get them answered. Call us on Saturdays at 855-935-TALK. It's just that easy. I have a number for you, Tom. This is a really interesting number. I want to share this with you. You didn't know I was going to do this.
Nope.
Okay. The average American's net worth is about $620,000.
That sounds high. Average.
Doesn't that sound high?
That sounds. Now that's including real estate, I'm assuming.
Yeah, that's the average American's net worth. Now I found this interesting because it's all a little math game that we play with ourselves. If you got in an elevator with Elon Musk, what would your and his average net worth be?
I would get out, but okay.
What would your average net worth be?
Mine plus his?
Yeah, about $400 billion. It'd be about $400 billion. That would be your average net worth.
Because I'm at about zero compared to him. Yeah, got it.
This is the problem with using the averaging.
I agree. If you look at the average retirement savings,
right,
it's a tiny little number. It's like $60,000 or something.
What's the median net
that's
worth?
A whole different. Wow, I'll say like 90.
No, it's like 180.
Okay, well, that's twice as much as I thought. So
but look at the difference between the median.
This is what playing with numbers will do to you.
Right, and that's where you got to be so careful. The reason I'm mentioning this is because you have to be careful when you hear people throwing numbers around, and you have to listen to what they're saying and then verify it, because the average net worth is skewed by all those billionaires. That's telling you what percentage of the population has a heck of a lot more money than you do. If our average is 620, but our median is only around 180.
The bell curve's not big enough for them.
Yeah, it's not big enough. It's
out there on the edge. Exactly.
I just wanted to share a fact.
Yeah, no, that's good. Numbers, what is statistics, whatever it is.
Lies, damned lies, and statistics.
Yeah, there you go. That's pretty much it. So it says it all.
I think that's attributed to Twain, but I'm not sure.
I thought it was Disraeli, but okay.
It could be.
Yeah,
let's find out.
Okay.
Well, do you have any questions?
You're going to make me wrong again. Do I have any? Yeah, I've got questions. You want me to ask some? You didn't tell me that. I was waiting for someone to call us at 855-935-TALK.
But they didn't, so use one of yours.
No, I'm just going to wait while you're verifying that.
These came in.
They'll call.
At,
you want me to read one? 855-935-8255. Call right now. He'll be right on.
I didn't mean the number. Who said lies, damn lies, and statistics? I'm looking it up. Hold on. Who said
it's going to be because Disraeli comes before Twain, of course.
Mark Twain used it.
Yeah.
But he was quoting Disraeli.
Oh, okay. So we're kind of both right.
Okay. I like it.
Yeah, it's good.
Right.
Did you get a call? Because I just mentioned the number.
It didn't work.
I'm waiting.
You mentioning the number apparently is not effective. Nor is me mentioning
as me
the
doing
number.
a lot of other things for a lot of other things. All right, then I will read a question. It came in at
and these came in at talkingrealmoney.com.
Yeah.
Oh, and by the way, if you call and speak your question, those go on the Friday Q&A podcast.
They sounded really good yesterday.
What did you think of the new listener
Sounds
quality?
like they're in the next room. They're really scary. Yeah.
There's an AI program that I'm using now on those spoken calls, spoken questions, that makes you sound like you're in the studio with me. So you can have a terrible mic now, and it still sounds great. Anyway, go ahead with your question.
It's shockingly good. Seth from South Lake, Texas.
Okay.
Don and Tom, appreciate everything you do and all the help you provide. My company just added DFFVX, the U.S. targeted value portfolio, to its 401k investment options. This is from Dimensional.
Yeah.
It appears to be the benchmark of the Russell 2000 value index. I already use AVUV for my U.S. small cap exposure and my Roth IRA. How do these two funds compare to each other? I could use some help trying to decide which one to use. DFFVX or AVUV. Now, one is a mutual fund.
Yeah.
And one is an exchange-traded fund. So there's a little slight difference there.
Yeah, they both
But otherwise, they're going to hold pretty much the same.
Yeah, I was going to say, they both lean very small and very value-y.
Yeah.
They have identical expense ratios.
You know,
The
owning
dimensional
either
is
one
a
of them is
little
going to be
more-
good enough.
The dimensional's a little more value, but boy, is it! And the Avantis is a little more small-oriented. But
I
the
think
differences
not much.
negligible.
Yeah, okay, and you're going to pay a little bit more probably for DFFVX.
They're the same price.
Oh, okay.
They're
Expense
the same,
ratio.
Let me just double check.
I would have thought that had been a little higher, but because AVUV is like 0.23.
Okay. You're right. 0.29 for DFA for the DFFVX.
Yeah.
0.25 for AVUV.
And then you may say, well, wait, DFFVX have been around a lot longer. It's got a bigger track record.
Doesn't
and I'm
matter.
going to say,
Track records
doesn't
don't
matter.
matter.
Hold the same types of stocks.
Track records don't matter.
This is the kind of thing you do want to have in your portfolio because, as I mentioned previously, that particular asset class can have times of great outperformance. This year, we're not bragging. We're just trying to tell you you should own them. That asset type of stocks is up 13%, whereas the S&P 500 up 1.5%. So that's a reason you're going to want to put those in your portfolio. It'll have those periods of time. It'll have periods where it underperforms.
Yeah. AVUV has outperformed the DFA fund over 5 years.
That's been AVUV been around how long? 4 or 5 years?
Yeah,
Wow.
a little bit.
I'm surprised to hear that. I mean,
they've been around 5 years.
But you're going to do fine with
Fund
either
started
one.
in 2019.
This comes up a lot where people hear us mention something on the program and they say, "What should I own that? Should I sell this?" You know, if you're already in some of these funds that we've recommended that hold those asset classes, unless something comes along that is dramatically different, which really doesn't happen very often in this industry.
And there is no dramatic difference between these two.
No, they're
They
very
are
similar.
so similar. Their performance in each year is so close to the same. I mean, the difference on the 5-year return is less than a 1% difference. So, 855-935-TALK. I'll say the number and see if you call.
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
I got a question for you.
What? You have a question?
This is really important.
I have people with
this is
questions.
Really, okay, this is real important.
Is it
but
about
I
a
have
bridge?
No.
Okay, good.
It's about meat. I got a large slab
I'm
of meat,
excited about meat.
for Super Bowl tomorrow. What time should I put that on if I want to have it roll off about 3 o'clock tomorrow?
I don't know. What kind of meat is it?
It's a big, thick cut of sirloin something. I don't know. I tried to get something inexpensive, but it was expensive.
It's not that long. I mean, you're going to cook it to rare or medium rare, right? Or rare?
Yeah, medium rare. I think medium rare. Yeah, I think so. Yeah.
What are you,
probably
what are you
on the
looking
rare
at?
side.
10 minutes aside?
Yeah, I don't know, but I was hoping to do like slower, like you do a tri-tip kind of thing.
No.
All
Sirloin,
right.
you want to get that sear. You want to get
sear
that
it
nice
and then
sear.
okay.
You're going to do it on the grill. You're going to do it in the house.
Yeah, I think I'm going to do it in the grill. Yeah.
Okay.
Yeah. Okay. So you're saying just cook as normal.
Yeah, you want to cook it as normal.
Okay.
That's
All right.
that's you don't want to slow roast a sirloin. That's different.
Just like you're going to do with the Patriots, or slowly burn them.
Is that the way it works? Yeah.
I hope so.
Well, given that they beat the Broncos, you can do anything you want to them.
And given that the Raiders beat the Patriots, so
All right.
Give me a break.
855-935-TALK is our phone number, and I was hoping we'd get through the whole show without talking about the Super Bowl, but apparently we did not make it.
Close, real close.
We were so close. Let's go to Bremerton, Washington, and Andrew, you're on. Welcome to the show.
Hi, Tom. Hi, Don. How are you guys today?
Good. Thanks.
Tom and I had a Zoom call about a year ago going over my portfolio. I went to retire meet a couple of years ago. Appreciate all you guys do. Longtime listener. Use the podcast during my workouts at the gym. I know you guys love life insurance.
Oh, God,
so
yes.
I have a whole life policy that I bought about 20 years ago.
Mm-hmm.
Yeah.
When my children were young and I was a single parent.
Okay.
I have about $60,000 of value in it. I've read the books on being your own bank and using your whole life policy.
I'm sorry. Did I laugh?
That.
Yeah. Mm-hmm.
It's through a mutual insurance company. It's not just through any insurance company. So what do I do with it?
What's your death benefit?
I have a $200,000 with a $300,000 LISR. So it's $500,000 total.
Yeah.
And how old are you?
59.
And is there anybody in your life who relies on you for income?
Not really. My kids are 27 and on their own. My wife has her own income, so
I don't believe in leaving a death lottery payment to children. I just don't believe. It's like, oh, let's hope Dad dies.
Oh, they're hoping that anyway. That's a whole other topic.
It's $60,000 that you can use while you're alive, or up to $500,000 you can give to your kids when you're dead. That's what it comes down to for me. And I would almost always choose the $60,000 for my retirement.
Because it is about $600 a month now for the premium for both the LISR and the standard policy.
That's easy to me.
It's gone up significantly.
$7,000 a year you don't have to spend anymore.
No, it's a bail. Wow. It's a bail for me. It's a total bail for me. If you said, if I die, my wife, she's going to miss my income, I would say you just hang right onto that thing. But you said she's fine. Your kids they're grown up. Yeah. You don't need this. You've got $60,000. You can immediately invest into something and grow for the long term. You've got $7,000 that you could now invest instead of spend on life insurance or spend on yourself and have a better life. I don't see any reason to keep whole life.
Okay. Because I have a universal policy too for $500,000 that, again, probably 30 years ago.
Dude, how much is that?
That's $100 a month.
How much is that baby worth?
He said half.
No, how much?
It only has maybe $5,000 or $6,000 in it.
I wouldn't keep that either.
I wouldn't keep it. What's the point of it? You're just blowing money.
Yeah. At this point, it's not. So,
and again, the only reason anybody should have there are two reasons people should have life insurance, cash value life insurance. One, for estate planning purposes, when there are certain advantages, but that's a very specialized or very special situation. Or if there is someone whose life would be economically damaged by your untimely death.
And Andrew, we got to ask you one more question here, just real quick. Why, you've done this yourself, why should people come to Retire Meet?
Retire Meet was amazing. I conned my wife, who is older than I am. She is now 65. We went. I had a blast. I actually learned so much about retirement planning. I actually used Merriman's 11.
Thank you, Andrew, for that.
Yeah, thank you so much. We got to run. We appreciate you, and we'll be back right after this.
Tom and Don are talking real money. Reality radio for a really great future. We're talking real money.
During the break, I glanced at the download numbers for my short story podcasts.
Yeah, very
popular.
popular.
I found something really weird. I made a Christmas podcast where it was like holiday stories, and it's still up there. Last week, last week. It's not Christmas anymore. I had
But you might be planning for Christmas 2026.
1,200 downloads of Christmas stories.
Yeah, people like to get in the spirit early.
Way early, apparently. 855-935-TALK is our phone number, 855-935-TALK. Here we talk about money, and it is a podcast, the Talking Real Money podcast, available on all major podcast services.
Oh, by the way, for those of you who don't, because I run into friends all the time, say, hear your show, but I don't, what's a podcast? If you have one of those phones, what are those things, like iPhone or whatever?
Like an iPhone
or
an
Android
that's right.
phone,
Those things, yeah.
Yeah, there's a thing there that says, there's a little app, I think it's called, that says podcasts on it.
On the iPhone, it's a purple button.
You push that button. It's pretty simple. I can do this. And then you type in Talking Real Money, and there it is.
In the
all
search box.
1,850 episodes. Well, you don't have to listen to all of them because that'd be crazy.
Some people do.
Anyway, I know.
Yeah.
Anyway,
855-935-TALK is our phone number, 855-935-8255. Let's go to Gig Harbor, where I guess people work a lot of gigs. Rob, welcome to Talking Real Money.
You don't want to turn down your radio, too.
Good. What's up?
Oh, well, on Saturdays when I'm working, I listen to the retirement programs on the radio. And on the way in this morning, it was Schlesinger, and she was talking to some guy who had, roughly about the same assets as I did. And she told him that, put his money in the market, his extra money that he had, and the guy in the background did the calculation. He said, this guy was 40 some odd years old, and he said, if you want to retire at 60, you'll have $1.5 million. And I'm thinking, okay, well, what is this calculation, and what is it that you can just put in the market that is there some set it and forget it? Because what I have is a 457B through my work, and I'm fully funded with Roth, and I'm on the catch-up program, and the best one I can see that we have for the market is VINX, the Vanguard Institutional Index Fund.
Okay.
And so I've got everything going into that, and then I've got a brokerage account that I kind of don't know what I should be putting money into, because, I want to try to set it and forget it as money comes in, but I don't know where to go with it. And I wanted to retire at 55, and I got together with the lady that's a little bit older than me, but she doesn't want to go till she's for another 2 years, basically. And I'm 57. I'll be 57 next month. And so I don't know. I'm not scared too much about the risk because I've got a pension from work and then a Teamster pension and then eventually Social Security. So there's like 3 annuities. So that box is checked. And I'm just thinking all this other money that's in my retirement accounts is kind of going to be there to be the hedge against inflation and whatever else comes down the line.
Okay.
Now let's go back to the beginning first of all, we like and respect Ms. Schlesinger's work. It's good work.
She's good.
Number 2, anytime anybody says, anytime anybody says, well, you have this much today and you're going to be able to retire in 5 years, and we would admit it if we met with you, that's conjecture because we have no idea what's going to happen in the market.
It could be that everything you have today, or half of it, goes away in the not too distant future. There's no calculator that tells you what the future is going to look like. But you invest hoping for a repeat of the long-term past. And the long-term past has shown that the stock markets in general, return about 10% per year in a well-diversified portfolio.
But here's the question,
have that with your Vanguard fund.
That was what I was getting to. Overall, his stock-to-bond ratio is 100% then stocks.
Sounds
is that what
like
you're saying?
Yep.
And that's, again, if you're really going to retire and need the money in a couple of years, that's probably a little high on the risk scale.
Yeah, because, Rob, here's the deal. Let's say whatever you have in the Vanguard Institutional Index Fund, it's a year from now, 2 years from now, the stock market drops 50%. How do you feel?
Oh, that's going to suck, but that's my other bills are covered through my pension from work and the Teamster pension, so they're kind of bumped, like laddered. You got the pension from work I can take as soon as I leave, which would be, say, 2 years from now, say June of 28,
Yeah.
And then when I hit 65, I could take the Teamster pension, which would tack on about an extra $1,000. And then at 67 or 70, we would throw in Social Security. But I'm just wondering, so the other money that's in the 457 and that's in the brokerage is kind of like my fund money, and just in case inflation goes crazy again.
Okay, so it's money you have calculated that you will not need to live on. Is that correct?
At least in the short term.
Right.
Yeah.
If
and by the way,
right.
the institutional index might be a little limited because that's just U.S. large companies primarily.
Right. That's why I would suggest you balance that out in your brokerage account with something that has greater diversification.
Small value, international,
something
et cetera.
And again, if we're going to go all equities with the understanding that, yes, the market could go down 50%, that would suck, but you're not going to panic. If you are absolutely convinced of that, then you could go with something like the Avantis Total Global Fund, which is AVGE.
AVGE.
And do that in your brokerage account so you get some diversification to offset the fact that your other account is very large cap growth stocks.
Okay, AVGE for the brokerage account. And then I'm not super limited in my 457B, but I don't really know that much about.
Well, what you're in right now is really well diversified, but in the U.S. So that's why AVGE would get you some international, small. You're going to be a lot better off.
Tom and Don are talking real money. Your guides to a really great financial future. Tom and Don are talking real money.
Favorite thing, our favoriteest thing in the world is to answer your
chocolate
questions.
Cake?
No.
Oh.
Answering your question.
My daughter's chocolate cake for my birthday. Oh, I don't know what she put in there. It must have been cracker. I probably shouldn't say that, but it was
crackers?
just so
Yeah,
off
she
the,
probably put crackers
okay,
in. Yeah.
It was so, literally every bite was so good. And so I saved one piece. Mm-hmm. And one night I was like, this would be perfect time for it. And I started rummaging around trying to find it. And I asked my younger daughter, hey, have you seen that cake? And she looked at me like, yep.
Oh,
gone.
Oh, this is your older daughter, the chef,
made
who
the
made
cake.
this.
Yeah. Oh, yeah.
I was going to say,
so
Aria is like a great cake baker?
She's pretty, yeah, she is a good cake. But
it runs in the family.
I don't know what was in there. Something, I don't know. But
I couldn't live around your house. I'd get fat again.
No, I'd be so fat. It's bad. So
anyway, we take questions at 855-935-TALK. I was going to say that.
Favorite things. So, and by the way, we have had two today that I don't know how to say this nice. We'll take all questions, first of all.
What was wrong with the questions?
Two of them today have been about retirement planning. Do I have enough? Is it invested properly? I'm going to retire in 1 or 2 years. But the thing is, around that,
are you going to get
really
critical again?
Yeah, I am.
Oh.
That really should be. You really should. And I have one. I have a guy who's looked at mine, looks at it every year. And that's just not only to make my wife feel good, but for make me feel good. Yeah. It's just somebody should look at that for you. And you're going to think, they're going to sell me something. Nah, not if it's a 100% fee only fiduciary, 100% fiduciary. They shouldn't. But you really should have somebody look at that plan because it's just too important to sort of say, well, we got it kind of figured out. Kind of ain't good enough for retirement.
I don't know.
In my book.
I think it depends. I still think there's an it depends in there. I don't think it's 100%.
That's one of my jokes for retirement, so I don't want to spoil it.
Depends?
Yeah.
Oh, yeah. I believe in it depends. I'm not.
It goes like this. There was.
You're going to pre-tell the joke?
No, I'm not going to tell the joke. It's a good joke though. I got it from Mel Brooks. You probably just watched a special on him.
Oh, God, you stole your jokes again. Okay.
Well, I steal them anywhere I can get them.
Steal all of them.
I guess only the bad ones.
Yeah, well, that's true. Anyway, I've totally forgotten where I was. I was giving you the phone number, 855-935-TALK, and I was also going to tell you that if you go to our website, which is talkingrealmoney.com, you can ask us questions. Now, I like it when you speak them into your computer mic or your phone mic, and you'll love the way you sound. We'll make you sound so good on the podcast, on the Friday podcast. You will sound magnificent. Magnificent. I don't know.
The Franco version? Yeah, okay.
Franco version. Yeah. Not Francisco. He's still dead.
Still dead. That's a good joke, too. That goes back a few years,
way back.
But still good, yeah.
Francisco Franco
Anyway,
is still dead.
Still dead. Okay, but you did half of what you're going to do.
Go to talkingrealmoney.com and send us your question.
You can type them in.
You can type them, and then Tom gets to kill a tree.
Yeah. Tom's, as the one listener wrote in, Tom's war on trees continues. I still love that. It's a great line. And this is one of those.
Because he could read them on his computer or iPad or iPhone, but he won't. He wants them on pieces of dead trees. I don't get it.
These huge threatening trees.
I don't have any paper here on my desk. It's all screens and pads and things. Anyway.
Okay. Well, we'll see how it works out for you.
Go ahead.
From Osage. I'm not sure I pronounced Osage, Minnesota.
Osage.
Okay. Wasn't sure. It might have been Osage.
No, it's Osage.
Okay. Ethan writes us, where's the best place to keep an emergency fund? No, he's got more. I was going to say, tell us, and we'll tell you where that'd be. Would an ETF within a Roth IRA be acceptable? If so, what ETF? If not, then where?
No.
It'd be nice to see the emergency fund gain some interest and keep up with inflation or possibly more. Now, wait.
Okay.
That's not the reason to have an emergency fund. That's... I want to make a lot of money on my emergency money. No.
Roths should be left alone for as long as humanly possible.
Yeah.
You don't want to be withdrawing your emergency money from a Roth. Because Roths are precious. They have a very limited amount of money that can be put into them, and that should all be treated like it's the best part of your portfolio. You got to.
It is.
You've got to.
It's the chocolate cake of your portfolio.
Yeah, you've got to nurture your Roth. Let it grow.
Chew slowly.
Your emergency money should go in a high yield savings account.
Yeah.
Period.
And today you're making 4%,
which is better than
up with
inflation.
inflation. Yeah.
Well, supposedly.
Depends who you believe. Remember when the government
numbers.
used to report that? They used to tell us what
the numbers were.
Yeah, exactly. So no, that's not a good idea. So
no, terrible.
Could it be done? Could you take money from your Roth? Sure.
Don't.
Should you? No. I like the idea of that's just retirement assets. Somebody brought this up in a meeting recently. Once I put it in there, I don't even think about it anymore. Exactly.
Right.
That shouldn't be. It should just
the
be left.
Way
grow.
It should be.
Yeah. And people don't. They see oftentimes they see the money and they think, well, I could go get that. You could. And we already touched on this a little bit. If you go to a place called bankrate.com, you can see the various high yield savings rates, which I think you said you found 4 still, right?
I'm going to check again.
That was pretty substantial for,
I'm
put it in, you get it tomorrow if you need it.
I'm still getting 4 on my bread account.
Yeah.
VO Bank, member FDIC, paying 4.02.
Is Brett's the one where the interest rate is rising all the time?
Oh my gosh, Santander, which is a Spanish bank, I believe. They have a U.S. branch called Open Bank, which is an internet bank. Wow. 4.2.
I think when you say internet bank, people aren't going to trust it. They're going to believe it's not FDIC
They're a real bank. They're FDIC
going to believe your money could disappear.
They're owned by Santander, which is a brick-and-mortar bank.
A
very big brick-and-mortar bank. FDIC insured. They're very highly thought of.
And is there a minimum?
A penny.
You gotta at least put 1 penny in to get the interest.
Yeah.
Don't count on the interest paying that much either, by the way, on a penny, just so you know.
No, it'll be 4.2% of a penny.
I can't run that number.
It isn't
too many zeros.
It's not a real number. It doesn't exist. You're not going to get anything.
Here's a real number, 855-935-8255. Call now. You can still get on the show today. Do it.
It's a little late, maybe.
Hurry.
3 minutes.
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
And I looked down the bank rate list, and there it is. Bread still paying 4%. It's really
rising
nice.
Interest.
It's really
rising
nice
interest
to go to your savings account online and look and see those nice big checks that come into the account every month. It's like, that's clockwork. Real money.
Yeah,
we're talking real money.
Good for you.
Well, I just think that
I think I made that in my stocks like yesterday.
I don't even want to talk. I try not to go look because I
had to today.
Lately, the numbers look really good.
Yeah, they do look really good.
Particularly for us because we have things like AVGE and
it's been remarkable. And you've mentioned it several times, worth mentioning again. Number one, take 20% off the top because you got to pay the feds.
Right.
And number two, take 20% off the top because the market may take that soon anyway. So it's not as much money as you think in that account.
Well,
so,
or it may not be.
That's true.
If
you leave it long enough,
that's why I like, that's why when I look at my whole portfolio, which I do, a couple of times a year, I notice that I'm relatively well balanced between fixed income and equities. I'm probably now 55, 45.
Yeah, I'm still 80-20.
Yeah, you're aggressive, man.
I'm keep working. I'm not going to stop working.
I'm still working, and I'm just not feeling. I'm just. I need mine more than you're going to need. You got more, so you
say that every time.
You do.
So mine's bigger than yours. Okay,
yours is bigger than mine, and
guess
size
so.
matters when it comes to portfolios.
There is that. There is that. So
it may not matter in other ways, which we're not. Yeah. We're not talking about.
It's not that kind of program.
No, I mean, I don't have a particularly large foot or big hands. But
leaving it there.
But
hey, listen, we're quickly running out of tickets for March 7th. That's Retire Meet 2026.
Yeah, we're way over half sold.
No, we're about 2/3. I looked this morning.
Really,
so if you want to join us, we'd love to have you join us. It's a great event. You heard from a couple people here on the program today that said, "Yeah, I learned a lot. It was fun." I think somebody said fun.
I have to say, it is kind of fun.
It's lighthearted. It's okay, but it is about money and about estate and about Social Security. Yeah, Medicare is always right up there because it's so hard to understand.
So do we have Vanguard and Dimensional coming?
I believe so. Correct. Yeah.
Yeah.
Mm-hmm.
Okay.
Yeah. And then the woman from Morningstar, what's her name again?
Christine Benz.
Oh, that's it. Yeah. Yeah.
Oh Lord!
She's driving herself, I guess. I'm sorry.
In a Benz?
We'll park that anywhere. So, it's retiremeet.com. Yeah, it's a pretty good deal. And, join us. We'd love to see you. How's that? Wow. Terrific promotion.
That was really good.
Very enthusiastic.
Yep. I've got my reservations.
I know. Oh, you do? Okay, good.
I got my ticket for a jet plane. Don't know when I'll be back again.
We still need to figure out what to do with the four of us on Sunday. So I got to work on that.
Oh, your wife, my wife, you and me?
Yeah. We're going to do something
we got to do something?
Yeah, I think so.
As long as it doesn't have anything to do with swimming in the lake or any of that stuff. I don't have
No one's getting near that number. No, please. No way. Yeah. RetireMeet.com.
Yeah, in addition to Retire Meet, please keep those questions coming, particularly the spoken ones. Go listen to the Friday podcast, the Q&A podcast. By the way, the art's really cool this week, or next week. The art's cool next week. I haven't put it up yet. Go to talkingrealmoney.com, click on the button that says Contact Us, and if you want to talk with one of our 100% fiduciary advisors, just click on Meet an Advisor.
The opinions and views expressed on this podcast were current on the date recorded. Opinions, estimates, forecasts, and statements of financial market trends that are based on current market conditions constitute our judgment and are subject to change without notice, including any forward-looking estimates or statements which are based on certain expectations and assumptions. Although information and opinions given have been obtained from or based on sources believed to be reliable, no warranty or representation is made as to their correctness, completeness, or accuracy. Information presented on the podcast is not personalized investment advice from Appellate Wealth. The views and strategies described may not be suitable for everyone. This podcast does not identify all the risks, direct or indirect, or other considerations which might be material to you when entering any financial transaction. Past performance does not guarantee future results, and profitable results cannot be guaranteed. We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. The podcast is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appellate Wealth, a fee-only registered investment advisor. Please see Appellate Wealth's ADV Part 2A on our website for information regarding Appellate's fees and services. Appellate Capital, LLC, DBA Appellate Wealth, is an investment advisory firm registered with the Securities and Exchange Commission. The firm only transacts business in the states where it is properly registered or excluded or exempt from registration requirements. Registration with the SEC or any state securities authority does not imply a certain level of skill or training. Appellate does not provide tax or legal advice, and nothing either stated or implied here should be inferred as providing such advice. Thanks for listening, and please visit TalkingRealMoney.com for more information and important disclosure related to performance of any specific index or fund quoted in this podcast. And the lawyers get richer.